You're welcome back to Business Incorporated on Channels Television. Now, the World Price Index data for July, according to World Economics in London, illustrates the dramatic impact of the British people's vote in favor of leaving the European Union, and as the value of the sterling being affected by that. Now, the data indicates that the euro rift grows to 20% among Eurozone countries as the sterling valuation plunges after Brexit votes. Now, let's talk to the chief economist at World Economics in London, Brian Sturgis, to get a sense of these developments. Brian, thank you for joining us on the program.
A pleasure.
Now, what exactly is the World Price Index data for July saying as regards global currencies, in particular the valuation of the pound after the Brexit vote?
Well, what we do is we try to get a fundamental valuation and what's called purchasing power parity. The pound sterling was was overvalued in the months coming up to the referendum. Then actually a couple of weeks before, there was some volatility, but it still stayed overvalued. The referendum result was a surprise to some people in the market, so they have various positions, and it meant that sterling fell quite strongly. The situation is it's now undervalued. Its fundamental on our PPP is about, it should be around about 1.39 to 1.4. So it's undervalued at the minute, which of course is quite helpful for exporters and the current account deficit.
Okay, the UK now has a new Prime Minister, Theresa May. What are we likely going to see in the currencies market?
Well, I think as soon as Theresa May picks the cabinet is very important, because if George Osborne is kept as Chancellor, it will give a fairly bad signal. What we've got to do now really is have Theresa herself was very much, she backed the government line, but didn't come out as strongly scaremongering as Cameron and Osborne. So very quickly we've got to actually get a firm cabinet, which the markets will trust, and start the negotiations with the European Union for Brexit.
Now, the sterling was regarded as overvalued, and that was stated in your report.
Yeah.
Now, according to the data, the value of the pound is falling to 7% after the UK voted to leave the EU. Does this create any form of uncertainty in the market?
Well, it will. I think it'll settle when we start. An undervaluation does help with the current account deficit. Currently we have a big deficit with the European Union, so if it helps reduce that to some extent, some of the trade figures come in. I can't see sterling coming back in the short term, because while the uncertainties remain, but the undervaluation, the only poor sign of that is if it causes any inflation, but inflation is extremely low in the United Kingdom at the minute. But we've got to actually see how the negotiations start for Brexit, and how our soon-to-be former trading partners respond to us.
Okay, according to the World Price Index, the undervaluation of the sterling at this time is seen as a good one for exporters. However, there are concerns over imported inflation, like you were trying to explain earlier on. What is your position in this?
There's hardly any inflation in the UK economy at the minute, so it's not in anywhere a short-term worry. In fact, if you remember, the Bank of England has been trying to stimulate the economy, which would result in some inflation, just as the same in Europe. Europe is only faces deflation.
Okay, just before I let you go, perhaps you could comment on the euro. For instance, the currency has recorded some level of undervaluation against the US dollar. Why do you think the euro has come under some kind of pressure?
Well, it's come under a little bit of pressure, but long term, once the position with sterling is settled, the euro, our research shows the euro is really pulling apart. we were able to actually get an idea on the relative prices, how a German euro is compared to, say, a French euro. And for German exporters, the euro is about 12% undervalued. For French exporters, it's overvalued. So that's a strain which is causing the euro to come apart at the seams. Then we have the potential banking crisis in Italy, and some German banks are in need of extra capital. So I think you will see the panic switch to the euro in a few months.
Brian, the yen is struggling with its overvalued status. Now, this seems to be giving the Japanese government some form of anxiety. Is there anything that could be done about it?
Well, the main thing they can do is increase their quantitative easing. But the Bank of Japan has been buying assets at a fair old rate at the minute. So all they can do in the short term is increase that. But there's a certain amount of, like the dollar, the yen is receiving speculation as a strong currency.
Brian Sturgis, Chief Economist at the World Economics in London. Thank you for your time.
A pleasure.
And the United Nations Conference on Trade and Development is advocating business integration in Africa for economic development. In an interview with Channel's business producer, Temple Ashaju, the regional head, Joy Katagekwa, explains how Africa's global competitiveness can improve if economies partner for trade advancement.
Well, UNCTAD firmly believes in the role, the catalytic role that trade can play to create prosperity for people. UNCTAD believes that trade is a critical pillar of countries' efforts to get to development. We are the focal point within the UN system precisely to support countries in that journey. And the point basically is that the opportunities are there, but there's work that needs to be done. There's several opportunities in Africa in terms of creating a bigger African market. There's several opportunities outside of Africa, and UNCTAD is really behind countries, African countries, supporting them at several levels. One is the question of policies, what policies are critical to use trade as a tool for development in general, but also sectoral. And then the second one is how, when you have these policies, do you actually get business off the ground? And we have some support programs, Emprotech, business linkages, and others that support to develop some sort of unique resilience to private sector through training and skills development that allows entrepreneurs to start and remain in business. So that is what it would be. Of course, there are several other overarching things in the sense that countries have to look at the trade environment beyond their borders. And in order to structure that relationship, it's very much a situation of bringing down tariff barriers, but bringing them down in a manner that does not cause a lot of difficulty in terms of countries and their prospects for industrialization.
Of course, you've got some landmarks in some African countries. Talk to us more about this.
Well, I think it is clear in the sense that we have been behind supporting countries in trade negotiations. It's a very complex process, as you know, and it also takes a while. There are no quick wins, but we have been behind African countries without exception in different areas, supporting them at the multilateral level with the WTO negotiations, at the African Union level. Nigeria obviously is taking part in these negotiations, and we're trying to give advisory services that can allow for a development-oriented outcome in the negotiations. In terms of specific landmarks, the nature of the work of UNCTAD is that it's demand-driven, and so when you go to different countries, the requests that we receive within the resources that we have, we respond. We have a series of programs that we have supported countries in developing investment policies, in negotiating investment trade agreements. We have a lot of programs in countries, including in West Africa, supporting them to develop competition frameworks, laws, regulations, institutions. We have supported several African countries in trade facilitation reforms, not only at the level of customs in terms of our ASECUDA program, but broader in terms of establishing the necessary needs assessments that will allow them to have a proper checklist.
Brother Heath. Okay, we'll go on a break now. I'll be right back.